So here we are. So here is what we need to do when it comes to, so any item we know to be our assets will be debited. Then any item we see to be on the credit side to be a liability must be classified must be posted on the credit side of your trial balance. Likewise, for equity, all equity items will be on the credit side. Then expenses will be on the debit side. Income will be on the credit side. So when you want to classify, you classify your item according to the element of what financial statements. And then like I said, you know, those items that will fall that that's that you need to classify as your what assets. Can you give me example of one example of assets you have? Example of assets. Because we have two types of assets. When it comes to assets, we have two types of assets. Assets can be classified into two. One, we have non-current assets. Non-current assets. Assets. And we have current assets. Are you learning? Liability is divided into also two. We have non-current liability and we have current liability. Are you learning? Are you learning? So next thing we have equity. Equity can be classified into, equity is just one. Then we have expenses. Expenses. Then we have income. Are we together? So these two, example of a non-current asset, that is, when we talk about non-current asset, there are types of assets that they have a lifespan of more than 1 year. Their lifespan is more than 1 year. 1 year in our what? In our record. They have a useful life of more than 1 year. And the example includes land and building, property, plant and equipment, office equipment, computer equipment, mention them, furnitures and fittings. Those ones are what? They can be classified under the what? Non-current assets. Then to sum everything up, we have property, plant and equipment to combine land and building, furnitures and fittings, equipment, motor vehicle and others. So you combine everything, we have a name given to them to be what? property, plant and equipment. Then also under the non-current asset, we also have investments. That is any the money the money you invest in another entity for you to what? For you to have returns that will lead to what? Cash inflow for you. You classify them as what? Investment. Then also under the non-current assets, we also have intangible assets. That is, they are they have a non-physical features, but they exist in the business. Example includes we have the goodwill, copyright. You cannot see the goodwill of a what? Of a company. And under the goodwill happens to be the something that that makes the company to what? To earn more what? To earn more profits. They are assets to the company that enables the company to earn more profit, like good reputation. Goodwill arises as a result of what? The good reputation of the company that the company has earned over the year, which makes it to earn more what? More profits. You can't compare Coca-Cola and just if another food and beverage company that just started last year. You can't compare them together. Coca-Cola has earned a good reputation, which makes it what? To earn more profits than just a company that what? That started, let's say, last year. The reputation will be what? The reputation, you can't compare their reputation together. Yes or no? Abi, can you compare their reputation, the reputation they are having? No. Then we also have current assets. They are assets being utilized by the company within 1 year. They have a lifespan of they have a useful life of just 1 year. Example includes cash. You cannot. It's not possible for a company to keep, though it's possible, unless the company fix such money till more than 1 year. But it's not possible for you to hold cash for more than 1 year. You have to use it in your what? In your daily for your daily activity. Abi, as you are, I believe that as you are, the money you are holding as individual, it's not possible for you to keep it for more than 1 year. You have to use it and also get another one. So cash as a current asset falls under what? Under current assets. Cash falls under current asset. We also have prepaid expenses. That is, there are expenses you've paid for, but you are yet to what? You are yet to enjoy the service. You are yet to enjoy the benefit. And the benefit will be utilized in the next what? In the next period. Are we together? Unrealized income is also there. That is on so another example is trade receivables. Receivables happens to be an asset because you are expecting money from your what? From your debtors. And trade receivables arises because of what? Because of credit what? Credit sales being made by the what? By the company. Then let's move down to non-current liability. Non-current liabilities, they are liabilities their liabilities to the company, that they have a lifespan of more than that, their repayment will occur after more than one after 1 year. Their settlement will take place after 1 year. Are we together? Something like loan. Loan falls under what? Under non-current liabilities. Then we also have current liabilities. Current liability include uh current liability include trade payables, bank overdraft, and accrued expenses. That is, when it comes to accrued expenses, there are expenses incurred which the company has enjoyed benefit, but the payment has not been made. Are we together? So like that, and we have equity. So for assets, like I said, you have to your assets on your trial balance. Your assets will always have a what? Debit balance, both current and non-current assets. And I've mentioned the examples of current and non-current assets while explaining. Then also, non-current liability and current liabilities will always be a credit what? A credit balance. Are we together? Your equity, example of your equity is your share capital. Your capital, the money you invest, because your capital will exist till the what? Till the end of the business. They are money invested by the what? By the business owner into the business. Are we together? Then we also have share capital, reserves, and the net profit. Net profit, or we call it retained earnings. That is accumulated what? Accumulated profit. Undistributed, and then we also call retained earnings undistributed what? Profits. That is the profits the company retain for future use, either to expand for what? More expansion, to expand more. Are we together? Then expenses. Expenses, you debit your what? Expenses. You credit your equity. Your equity is a credit item. Then expenses is a what? Is a debit item. Then income is a what? Is a credit item. So now let's quickly look at the question we have here. So can you see my screen? Can you see my screen? So let's move down to the question. We are being asked, so I'm presenting here. So the question says, so now let's do I've read the question before, not to waste our time. So I'm coming. So now let's solve this question. So we are preparing. What's the name of the company? Oak. So we have Oak, Polo, Polo Enterprise, Abi. Enterprises. So we are preparing the trial balance for this one. And then We are preparing our trial balance for the period as at 30th. Twenty 2025. Are we together? Are we together? Coming. So, can you hear me? So, here we go. So, we don't need any dates when it comes to trial balance. So, what we need is, we need our particulars as our headings. Give us details of the accounts. Then, we have debits. Then we have credits. So now let's start. So now for the capital, where are we posting capital? Like I said, under which side are we posting our capital? Oh yeah, I want to hear. Where are we posting our capital? Where are we posting our capital? So where are we posting our capital? Where are we posting our capital? Oh yeah, I want you to talk. Where are we posting our capital? Can you unmute? Where are we posting our capital? Oh yeah, where are we posting our capital? So we have a capital being the first item. Our capital will be on the credit side of how much? So we have to carry this. Don't forget your naira side. So we put this, we can carry it. We can use the overlay depending on how you want it. So it will be on the credit side. So we say 12 million, 12.5 million. Abi? So receivables, what's receivables to us? Receivables, what's receivables to us? I want to hear you. What is receivables to us? Is it an asset or a liability or an expenses or an income or equity? Oh yeah, I want to hear you. How will you classify your receivables? You know, I've explained all these things before. Oh yeah, let's talk. Oh. How will you classify your expenses? I'm with you.
Debit side.
It should be on the debit side. Why? Why do we put it on the receipt? It must have a purpose. Because you need to understand the reason we have it on the debit side. Why do we have it on the debit side? Why do we have it on the debit side? I need you to talk. Oh. Why do we have it on the debit side?
It's an expense.
Receivable is not an expense to us. Are we together? It is an asset. Like I said, we have non-current assets and we have the current assets. Receivable is being known to be the money we are expecting from our customers that purchased our goods on credit. Do you understand? Do you understand? Are we together? So receivable will always be an asset. So we are putting this under the debit side, and it is an asset, and we post it under the what? Under the debit side. So the next one, we have cash in hand. So where are we putting our cash in hand? Where are we posting? Debit side or credit side? Where are we posting? Oh yeah, where are we posting? Oh?
Debit side.
It will be where? It will be where? Where are we posting this? And what's the reason why we post it on the debit side?
Debit
Let's
side.
talk. Huh? Oh yeah, talk now. We are posting cash in hand under the debit side because it is an asset to us. Are we together? And it also falls under the current assets, rather under the current assets. So how much are we looking at? How much are we posting? We are posting for 241,400. Are we together? So next one. The next one is furnitures and fitting. Where are we posting these two? Debit side or credit side? Oh yeah. Are we posting on the debit or credit side? Debit or credit? Can you unmute your mic to know? Debit or credit side?
Debit side.
Why? Why are we putting it on the debit side?
It's an asset.
It is an asset. Which kind of asset? Which kind of asset, please? You know, we have two types of assets. We have the non-current and we have the current assets. So where are we putting this? Let's
Non-current
assume
asset.
we want to prepare. Which one?
Non-current.
It is a non-current asset because it has a useful life of more than 1 year. So we are putting 4 million, abi 4,220,000 naira under the debit side. Next one, payables. Payables. So where are we putting our payables? Where are we putting our payables?
Credit side.
Under where?
Credit.
Debit or credit? And then why
Credit.
are we putting it? Yep,
Credit.
it will be on the credit side. So after posting on the credit side, why are we putting it on the credit side? Why are we putting it on the credit side? Why are we putting it on the credit side? Because sometimes they can just give you a question like this. You need to understand the reason. You are posting on the debit or credit side. We are posting
It's
on the credit side.
liability. It's a
It's what?
liability.
It's a liability. And which type of liability?
Correct.
It is a current liability because we are expecting, it is expected of us to settle this liability within 1 year. Do you understand? So how much are we posting? We are posting 344 2000. Abi 400 like that. 344 344 to 400. Next one, inventory. The inventory at the beginning, is it an asset or a liability?
It's an asset.
Which type of assets?
Current asset.
It is a current asset because we we can sell our inventory within what? Within 1 year. It is expected of us to sell our inventory within 1 year. So inventory will be a current asset. Are we together? Inventory. How much? 1,846,000. Next one. The next one is our revenue. Where are we posting our revenue and what's the reason for posting our revenue? Oh yeah, why? Where are we posting our revenue to and the reason?
On the credit side.
On the debit or credit?
Credit side.
Credit side. Why? 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 Why are we posting on the credit side? Revenue happens to be the income to the company. Yes or no? And then we are posting income under the what? Under the credit side. So how much is our income? We have 49,100,000. Next one, we have purchases. So where are we posting our purchases? Where are we posting our purchases? Debit side or credit side? Where are we posting our purchases? Where are we posting our purchases? I need your attention. Where are we posting?
It's on the debit side.
Why?
Expense and expense.
It is our expense. It is our expense. How much? So we have 38,500. Are we together? The motor vehicle at cost. Motor vehicle, where are we putting our motor vehicle? And what's the reason?
It's on the debit side.
It will be on the debit side. Why? Why?
An asset. An asset.
It is an asset. Which type of assets?
Non-current asset.
It's a non-current asset. So how much? That's 4 million. 4,500,000. Abi. Next thing, motor vehicle expenses. Where are we putting this? Motor vehicle
Debit side.
expenses
Expense.
is an expense. Abi. So we are putting it under which side? We are putting it
Debit
under
side.
which side? Debit side. Abi. How much? That's 2,750,123. Next thing, rent. Where are we putting rent? Where are we putting rent?
Debit side.
Where are we putting rent?
Debit.
It should be a debit. Why? Why?
An expense.
Yeah. Why are we putting it on the debit side? Why are we putting it on the debit side? because it's an expense. Are we together? Rent is an expense. So we are putting it on the debit side. How much? So we have 5620. One, two, three. Okay. Drawings. Drawings is an asset because we use it to reduce our capital. Are we together? And it will always be on the debit side. Do you understand? So how much is our drawings? 2650. 1, 2, 3. So we are done. So let's add everything together to know if what we've prepared is actually correct or not. Do we have a balance? Is our this thing our trial balance balanced? Do we have the same value both on credit side and debit side? Do we have the same value? I need your response, please.
It's the same thing.
It is the same thing. Can you see that? Both is because we follow the root the double entry principle. That one enables our what? Our trial balance to have the equal value. Are we together? So sometimes we may have situations whereby our trial balance will still be equal. And then we can still detect some errors. I will trigger that the last time. Where I will talk about error of omission, error of commission, complete reversal error, transpository error, and other errors. And we've seen how this can actually work, can actually be detected, and we will look at how we can correct this. Like omission. If an account is being omitted, what do we do? You get if it's you just perform your double entry principle. Are we together? And like other kind of words, other kind of error. Are we together? So that's the treatment of such. So any question? So now let's quickly look at something. So um we've talked about the errors that do not affect trial balance. We'll be looking at other errors that affect trial balance and how do we correct all these errors? Are we together? How do we correct them for us to have a proper record? Are we getting it? Are we getting it? So now let's quickly look at explain the errors that do not affect your balance. Then move to errors that affect your balance. Then raising of suspect accounts. Then without wasting much of our time. Now we have two errors in trial balance. We have the one that they will still make your trial balance to be what? To have a to make your trial balance have equal both debit and credit side to have equal value. Are we together? The first one is error of omission. Now, error of omission happens. This is a complete omission of transaction from the ledger. You, or maybe by mistake while recording, you mistakenly what? Ignore the transaction while posting into your what? Into your ledger. Are we together? For example, a cash sales of 100,000 naira omitted. So how do we treat this? Can you tell me the treatment of this? How do you treat this? Oh yeah, tell me. How do you treat cash sales? We've done the posting into the ledger, yes or no? And we know the account that needs to be debited and the account that needs to be credited. So how do you treat this? I need your response. Oh yeah, I'm waiting. I am waiting.
I
I'm
don't
waiting
know.
for your response. Oh yeah, cash sales, which account to be debited and which account to be credited?
I don't know.
Yeah, we've treated this before now. You said what? Can you unmute? Can you unmute? Oh? So which account are you debiting? Which account are you crediting? When it comes to cash sales, I need your response. Oh. You are delaying also.
Debit cash account and credit sales account.
Okay. I will credit sales account. Thank you. So we debit cash account, I will credit sales account.
Debit
So,
cash and credit
but
sales.
this, yes. So here, this account has what? This account has been what? Omitted. So the correction is just what? Go to your cash account, you debit your cash account, and you credit your what? Sales account. Are we together? And that's all. So the next thing is error of principle. Error of what? Principle. Now, this is a kind of error that occur whereby you post on the wrong classes of what? Accounts. On the wrong class of accounts. You know, we said we have two types of accounts. We have the personal accounts and impersonal accounts. Yes or no? Then we said impersonal accounts can also be divided into two. we have the nominal account and the real account. So, and we'll define what personal account is. That is, they are kind of accounts of individuals that have a transaction, a business transaction with the business entity, which include customers, trade payables, uh, customers, vendors, then anyone that has name, business entities. Once they have a transaction with the business entity, then once they have their name, then you classify them under the personal account. Then in personal accounts, like I said, there are accounts that do not relate to individuals, business entity, or corporation. And then this includes accounts of an asset, properties, then expenses and what? Income. Then in personal accounts include can be classified into two, like I said before. We have the personal accounts, we have the real account and nominal account. Real accounts relates to the accounts of properties or tangible assets of the what? Of the company, which includes property, plant and equipment all together. Are we together? Like building accounts, land accounts, motor vehicle accounts, equipment accounts, and so on, furnitures and fittings, because they have physical what? Physical existence. Then real accounts, the account of expenses, income, gains or losses of a what? Of a business. Are we together? So now we are looking at wrong class of accounts. When a transaction is posted to the wrong class of accounts, a principle of principle has what? Has been committed. An example is where a trader purchases an additional motor vehicle for 950,000 naira on a norms in cash. On a norms, if you are to record this transaction, you are opening motor vehicle account and what? And cash account. You debit your motor vehicle account and you credit your what? Cash account. But based on the error, you now treat the motor, instead of debiting your motor vehicle account, you now what? Debit motor vehicle expenses account and you now credit your what? Cash account. You know that kind of error has what? Has occurred. Yes or no? So how do we correct it? Correct this? Just go to your motor running expenses account, you credit it, then you now debit your what? Motor vehicle account, and that's all. Do you understand? Yeah, it is. So correction is just, so what do we do? Motor vehicle account, abi? Yes. Then you now credit what? Cash account. Motor vehicle, motor running expenses account. Do you understand? So next thing. So we've solved that one. We are moving at is error of commission. Now, this is an error within the same class of account, but affecting different persons. This is actually based on personal account, but it's affecting what? Different person. It is posting of entry to the account of person other than the one intended. You want to, let's assume, you want to post into Biola's account, you now post into Bola's account. You know, there are different names. Though the name sounds familiar, but they are different what? They are different individuals. So what you just do is, now, example, payment of 120,000 naira received from B Abbey that is credited to B's Abu's account. So the correction is just go to B Abu's account, you debit B Abu's account and you credit B Abu's account. That's all. You know, in Biabu's account, you assume it is Biabu's that is what? That is paying us, that is giving out. Abi. But now, for you to correct your error, you now debit Biabu's account and you credit what? Biabu's account to reflect that Biabu's account has reduced by 120,000 naira. Are we together? We also move to compensating error. An error made in the ledger which is exactly by sheer what? Coincidence. That is just a coincidence. Balanced by another what? Another error somewhere else in the what? In the ledger. So here you made an error, you made a debit error somewhere. Then in another account, the corresponding credit entry now occurred in another what? In another account. Are we together? Are we together? Are we together? So in such an instance, just go to the account that is being affected. Then you effect the two what? The two error on the two accounts. Now, more than one error may at times be made, and yet the sum total exactly equal in another single error somewhere in the what? In the ledger. Let's assume a debit error has occurred there in two or three places. Then the corresponding credit entry to this error now occurred to be the summation of all this debit error in another account. So that's compensating what? Compensating error. The effect is usually that there's overstatement of an item in one account and an equivalent amount understated in another what? In another account. You have overstatement in one account, then the corresponding entry you now what? There's what? Understatement in another account. That's compensating error. Then complete reversal. Complete reversal is just the account to be debited, you credit it, then the account to be credited, you now debit it. So what you just do is to what? Is to now let's go. Now this involves error in which for a transaction the account that ought to be debited is credited. Are we together? And the one to be credited is now debited. For instance, cash paid to trade payables, cash paid by trade receivables is being debited in cash account. Is cash paid to receivables. It should be you only paid you can only pay cash for your payables. Are we together? And also receive cash from your receivables. Are we together? So this error. So now let's take for instance, you have a there is a cash payable. You made a cash, you paid money to your payables, to your vendor. You know, on the norms, your vendor account will reduce, yes or no? So whereby you are debiting your trade payables account and you are crediting your cash. But instead of doing that, you now credit your payables account, trade payables account, and you debit your cash account. So how do we correct this? For example, cash sales of 100,000 naira. Your cash account was debited, abi? That's how to go. And the sales account is being credited. Also, purchases account worth 150,000 naira from Ezen was debited into purchases account and credited to sales account. Notice that there is over debit of 50,000 500 naira, over debit of 500,000 naira and over credit of 500,000 naira. This error cancelled each other. To correct this, you credit cash account, abi, which is the affected account. You credit cash account to cancel the error which has been overstated, and you also can debit Ezen's account to also cancel the error. Are we together? Then we also have error of original entry. This error of omitted, this error is committed where a transaction is incorrectly recorded in the source document or book of original entry. Here, the error has occurred right from what? From either the source document or um, error of original entry. Are we together? It's from the source document or book of original entry. And you know book of original entry, their prime entry you initially record before you transfer them to your ledger. So and any error being occurred will be carried forward. Hmm? Are we together? Are we together? Are we together? Oh,
I'm here.
okay. So for example, this type of error will not have any effect on the agreement of the trial balance. It will not have effect. Your trial balance will be correct. For example, if goods invoice at 5,000 52,500 to JK Salmon is being recorded as 55,200 in the sales day book. You know, after we prepare our sales day book, we now have we have so we now have where a transaction is incorrectly recorded in source document or now If goods invoiced at 52,500 is now recorded as the original amount is 52,500, but we overstated our sales debut to be 55,200. The trial balance we in no way showed that there is no error that has occurred, whereas there is actually what? An error. It is a situation in which the original amount was recorded incorrectly. The double entry are observed with completely different what? Figures. So what do? You look for the difference between the error that occurred and the what? And the this thing, the error and the original amount. So what's the difference of 52,200 and 52 and 55,200? 52,500 and 55,200. So what's the difference? So the difference is just that you go to your sales account, you debit your sales account, then you go to your receivables account, you credit your receivables account. Are we together? So that's treatment on that. Then transposition error. This occur when the position of closely related figures is interchanged and the debit and credit entries are passed with the what? Interchange figures. For example, credit purchases from Asamao for 107,000 naira being debited in purchases account and credited in Asamao's account as 170 naira, 170,000 naira. You can see that we have because of 7, the 7 was what? Interchange. So how do we correct this? We've overstated our what? Our account. So what do? You go to your purchases account, you credit your purchases account, and you debit Asamao's account with 63,000 naira. Now, we move down to errors that affect our trial balance. Are we together? Are we together? Oh, are we together?
I'm here.
So errors that affect our trial balance. The first one is arithmetic or casting errors. Arithmetic or casting errors. How does that one affect? Get how are we how do we know there is casting error? Let's say because you are casting your trial balance in the course of you casting your in the course of you recording your listing of you balancing your ledger accounts, this occur. So it will actually affect your what? Affect your trial balance. Let's take for instance your balance carry down. You will use a wrong figure in your balance carry down. You know it is your balance carry down that will be what? That will lead to your balance brought down. And this will now be transferred to your what? To your trial balance. Once this error occur, then your trial balance will not be what? Will not be in agreement. Are we together? The second one is using one figure for the debit entry and another figure for the credit entry. In respect of one transaction, use a figure. Let's say use 500 naira for your debit entry and 50 naira for what? For the credit entry. You see, this kind of error will not make your what? Your trial balance to what? To be accurate. Another one is error of extracting the wrong figure from the ledger to the trial balance. While you are preparing your trial balance, you know you need to extract. So this error now occur as a result of your what? Extraction from your ledger. So it will actually make your what? Make your trial balance not to be what? Accurate. The next one is listing a debit balance to the credit side of your what? Of your trial balance. You have a debit balance. You now list it on the credit side. Actually, it will not make your what? Your trial balance to be what? Accurate. The other one is now listing of credit side to the debit side of your what? Of your trial balance. You have a credit balance already. Instead of you to put it on the credit side, you now put it on the debit side. Your trial balance will not what? Will not be accurate. Posting of debit as credit while the other entry is correctly made. You want to have a debit entry, you now post it as your credit entry. And likewise, your corresponding entry, you post it to the credit side. So your trial balance will not be what? Accurate. Incorrect lifting of opening balance into the trial balance. You, ins- your opening balance lifting is not correct. So it will actually make your trial balance not to what? Not to be accurate. Making an entry on only one side of the account, omitting the second entry. That's one side recording, posting. You only post on one side, ignoring the other side of the what? Of your entry. So at the end of the day, your trial balance will not be what? Will not be accurate. Then we have two approaches to the corrections. Now, depending on the effect of your of your error, we have two approaches. One is the correction of the errors that affect your what? Trial balance. That do not affect your trial balance. So how do you effect this? For errors that do not affect your trial balance, how do you effect this? Is to just apply your double entry principle. The account to be debited, you debit it. The account to be credited, you credit it. Are we together? Go to the affected this thing account and apply your double entry principle. Are we together? But for the errors that affect trial balance, that one, what you need to do is just go to the debit you just go to the affected account and then you raise your suspense account. Are we together? So the correction of errors will be by passing your double entries through the affected ledger and your suspense account for errors that affect trial balance. So what's suspense account to us? Suspense account is an account in which the net difference in your trial balance total is recorded temporarily until there is enough information available to locate the errors and make necessary adjustments or entries to correct the error. Yet, the difference between the debit side and credit side, you transfer it to your suspense account until when you get available information on the errors that has occurred. It is non-permanent account. which is used to record net difference between debit and credit side of an unbalanced trial balance. It warehouse interim difference in the trial balance until the errors are discovered and corrected. So how do we locate our errors? We locate our errors. Errors which affect the trial balance are more easily discovered than those which do not affect the trial balance. Like I said, for you to locate, you can easily locate errors that affect trial balance than the errors that do not affect what? Trial balance. In most cases, errors not affecting trial balance will only come to light through complaints from the what? From the third parties, such as customers or suppliers. You can only know the effects of the errors that do not affect trial balance when someone make a complaint. When there is complaint from the third party, that's when you know that an error has occurred. Like the cash sales. Omission of cash sales. It is until you get complaint from your what? From your customer. That's when you know that an error has what? Actually occurred. Are we together? But it is always obvious when it comes to errors that affect trial balance. Then what are the tips we can actually to locate our error? One, the first thing is you recap or recheck the addition of your ledger balances on your trial balance. You recap both debit and credit side of your trial balance to see what has actually happened. Then check for any omission on the trial balance. You look if there is any error, any omission error on your trial balance. Make sure that the ledger balances appear on the correct side of the trial balance. You make sure the ledger balances appear on the correct side of your trial balance. You look at the income, liabilities, and capital accounts with your sales accounts. They are actually on the credit side, while expenses and assets, drawings, purchases, they are to be on the what? On the debit side. Are we together? Then check for the correct transfer of ledger balances on the trial balance. You check for the correct ledger balances. That is being transferred into your trial balance. Are we together? Then another thing is take a general look at the entries in your ledger balance, to see if a figure close to the difference sought is in your trial balance. You quickly look at your ledger balances to see if the error that has occurred is actually in your trial balance. The another thing is check the double entries in your ledger. You check the double entries you've applied in your ledger. Look at your entries in your ledger. Then the next thing is what? Check whether the opening balance in your ledger are correctly lifted. Look for your opening entries to see if what you lifted are actually correct. Are we together? Then check the arithmetic in your ledger. Recast each side of your ledger account and reconfirm the balance carried out and balance brought down. So what you do is go to your ledger bag, do your recast your balances, your balance carried down and your balance brought down, to see if they are actually what correct. If the trial balance difference is exactly divisible by 2, check for one half of the difference on your trial balance. The figure might be on the wrong side of the what trial balance. If what you have, the difference is actually divisible by 2, so you look for, to check through the difference, you look for the half on the what, on both the debit side of your trial balance, to see if the error has been posted on the wrong side of your trial balance. Then take the difference between the debit side and credit side to ascertain whether their balances in the trial balance with the same value. If so, you correct the difference. Then examine whether discount allowed and discount received are correctly posted. You look for your discount allowed. You know, discount allowed is a loss on the company, so you are debiting it. You look if what you have is actually on the debit side, and your discount received is an income, is a gain to the company. So you look at it, if what you posted on your discount received is what is on the credit side. Are we together? Determine whether the final figure from your sales and purchases journal have been posted to the sales and you check for your sales and purchases account if what you have in your listing are posted correctly. Then verify to know whether balances on the ledger account confirm whether they are being posted. Then check obvious item on either debit or credit sides of your trial balance. So those are the steps. Those are how to locate your errors. Then how do we correct? We want to look at the steps involved in correction of your errors. The first one is you read your question very well and understand the transactions involved. Are we together? Read your question very well and try to understand the transactions involved. When you understand your transaction, determine the accounts involved. Are we together? You need to read your question very well, understand the transactions that has occurred. After that, then the next thing is what? The next thing is to determine the accounts involved. Look for the accounts, the debit entry and the credit entry. Then you pass your entry. Look for the accounts to be debited and the accounts to be credited. Compare the entries which has to be passed, which has been done. You check if what you've done is correct. Then on the basis of the observed difference, effect the correction of errors using double entries with either ledger accounting or your journal entries. You effect your correction using your ledger account, or you use what? You make use of journal entries. Now, what are the uses of suspense account? The one uses is that it is being used in correcting errors affecting trial balance. We use suspense accounts mainly to what? To correct errors that affect trial balance. Then another thing is incorrect balances in a trial balance is posted to the suspense account. Your incorrect balances in your trial balance, you use it, it's being posted to your suspense account. The last one is it is useful in balancing all temporary balances. Are we together? We use it to what? It is being used in balancing our what? Temporary what? Balances. So any question? Any question? No. Any question? Any question? Oh.
No question.
So next week we will solve this question, this illustration 5.2. We will solve it because of time. So we are moving to the communication skill class now. So very soon we will be starting communication skill class. Hope you enjoyed today's class. So in the next 15 minutes, we'll be joining communication skill.
I'm not able to
So communication,
join
yeah.
communication skills class.
What did you say?
Thank you for the and
Okay,
I'm not
you are
able to join
welcome.
the communication skills class.
Okay, you won't be joining communication skill class.
Yes.
So can we post? It means if you are not joining, it means we'll be postponing it to tomorrow. You know we have communication skill class tomorrow.
Yes, we
Abi?
do.
Okay.
Yes.
So tomorrow we'll continue our communication skill class. Or should we use some minutes from communication skill class to solve this question? Hello, are you there?
I didn't get you.
I said, do you still have the strength? We can just use like 10-30 minutes from communication skill class, or we should just round up everything till next week for basic accounting.
You can do the question now. It's next starting at least 30 minutes.
Okay, we can do the question now, then we round up everything in the next 30 minutes.
Yes.
Okay, that's good. So let's quickly. So now let's read the question. After extracting the trial balance of Jirin Orin Enterprise on 31st March 2022, it was discovered that the debit side was higher than the credit side of your trial balance. A review of the ledger revealed the following errors. 1. A sum of 720 naira on a receivables account was omitted from the balance of trade receivables. We omit this. The sum of 720 from our trade receivables. 1. The next one is an item of furniture purchased for 5,760 has been debited for repairs. You know that's an error. We purchased furniture for 5,760. Instead of we debiting our furniture account, we now credit what? Repairs account. Which kind of error is that? Which kind of error is that? Oh? Oh yeah, now which kind of error?
Reversal of
Hmm?
entries. Reversal of
Error
entries
of reversal of
or
entry.
something like that.
It's not error of reversal of entry. It is error of principle. You know, repair and maintenance fall under expenses account. Yes or no? And a furniture account fall under which account? Is an asset. Abi? So instead of we debiting furniture account, we now debit repair and maintenance account. So that's error of principle. Do you understand? Because it affects a wrong class of accounts. Yes or no? It only
Yes.
affects a wrong class of what? Accounts. Now the next one is the payment side of our cash account had been undercast by 3,900. We undercast the credit side. It means the debit side is higher than the what? Than the credit side. That's an error. We will solve this one after the other. The total of one page of the sales day book had been carried forward as 12,924, whereas the correct amount was 15,084. What happened? There is what? There is undercast. We've undercasted our what? Um, Sales accounts and the receivables accounts. Abi, which kind of error is that? Right from the source documents or this thing, right from um, this error is from our subsidiary books of accounts. So which kind of error is that? Oh yeah, which kind of error is that? Oh, that should be error of original entry from the source document or subsidiary books of accounts. Or day book rather, or book of prime entry. Right from our day book. These all errors occurred. So what do? It means the two affected accounts we have to be corrected. Are we together? Are we together? Oh, then the next one is, yeah, the next
Can
one is a
you
debit note of, okay, a debit note of 1,260 received from a customer had been posted to the wrong side of the account, of his account. We received a debit note. When a debit note is given, when we give out a debit note from the company, it shows that the other entity is what? Is owing us, is the one owing us. That is the person's account has been what? Undercasted. We've undercharged the person of his account. Are we together? Now it is now the customer that gave us what? That gave us a debit note, telling us that we are the one owing what? Owing the customer. So we are owing the customer what? 1,260. That shows the customer's account has been overcharged. Are we together? Are we together? Or this usually occur when there is what? Return inward from the customer. Are we together? So what do we do? Instead of they said had been posted to the wrong side of his account, we are to use 1,260 to reduce the customer's liability. Yes or no? By crediting the what? Customer's account. But instead, we debit. It's being debited. So we need to what? We need to correct the error and also what? Post to the right what? Right the right account. So we will solve this. Then the last one is that Mr. Laku, whose debt of 3,120 to the business had been written off, we've written off his debt, being a receivable. We've already credited his account with 3,120. But the man now later paid. He paid us his what? His money. His personal account was credited, but no corresponding entry was made. What's the corresponding entry for this? We receiving money. What should be the corresponding entry? Oh yeah, what should be the corresponding entry? Oh yeah, now corresponding entry. We receive money from the customer.
Should be
We
debited.
credited the customers. We will debit what? Which account are we debiting? Oh yeah, what's the corresponding entry? I'm with you. We receive 1,120 cash. Let's say cash. So what's the corresponding entry?
Debit the receivables account.
We've credited our receivables account already, which is Mr. Laku's account. So the corresponding entry is going to be it means the man paid us cash. We are receiving cash. Abi, we are receiving what? We are receiving that. We are receiving what?
Cash. Debit cash account.
We are receiving what? So it means we are debiting our what? Our cash account. Abi? Oh yeah. Now let's quickly prepare our journal entry. Oh yeah. Let's prepare our journal entry, please. So they said we should correct this by passing. So so now let's correct our error, our this thing. So passing our journal entry. You know our journal entry is like this. So say journal, Abi. Oh yeah. Now the first thing, so the first one we have here, they said a sum of 720 naira on a receivables account was omitted from the balance of trade payables. So it means we need to, it's being omitted. It means the trade payables we have has been undercounted by 720. So we are debiting. What we do is what? We debit our trade payables. Abi, debit, we say trade payables, trade receivables rather. We debit our trade receivables. Trade receivables by how much? 720. We are adding. Then suspects accounts. Suspects accounts will be what? Will be credited by 720. Are you getting it? So now say being receivables receivable balance balance omitted. Are we together? So always put your narration in your what? In your journal. So next one. Oh, an item of furniture purchased for 5,760 being debited to repairs. So we've debited our repairs account. So what do? We have to reverse it. Then we post this into the appropriate account. So we say we debit our furniture account being an asset. Abi, furniture account. Abi, are you there? Hello.
I'm here.
So how much are we debiting? 5,760. Then repairs account will be what? With the same amount. You now put it as based on what we have on the question. You said being what? So what kind of what? Being error of what? Error of being error of original error of principle, not original entry. Are we together? Let's quickly solve this more and we'll call it a day. The next one, the payment side of the cash has been undercasted by 3,900. Abi, the payment side. So we've undercasted our. So what do? We credit our cash accounts. Abi, cash accounts with 3,900. Then suspects accounts will now be what? Suspect account will be debited. So we now say being cash payments undercasted. Are we together? So can we continue this because I don't want them to lock me inside the church. I'm in the church premises and I think they are done. Hello.
All right. Okay.
So on Monday, Abi, we continue from
Yes.
here. No wahala.
All right.
So
Thank you.
have a wonderful weekend and also Valentine's Day celebration.
Thank you.
Enjoy your day.